Well, good morning, everyone. Let's talk about what I did today while I was scalping the S&P 500 ETF, the SPY, SPY, scalping on the 1-minute chart, and want to walk you through the trades that I took today, why I took them, where I took them, all of that good stuff. No different than any of the other videos that I've already put together. So with that in mind, let's get to it. So what you're looking at right now is the 1-minute chart for the S&P 500 ETF, SPY in particular. And as you can see, Pacific Coast time, I'm in California, at 5:30 this morning, that's when the CPI came out. And people really liked what they heard. Instead of being at 5%, we were at, I believe, 4.9%. It's crazy to me how that 0.1% can make such a big difference. And we see what that did to the market. So right there at 5:30, pre-market trading, not everybody has access to that. Perfectly fine. Most people don't want to trade pre-market or post-market. But you can see right here, look at that massive spike upwards, just boom, exploded. So people were really looking forward to really an increase in the market, really a bullish market. And you can see that, for the first hour before open, just spiking through the roof. And then we saw everything kind of level out here, right? We kind of hit an area of resistance where I think the market said, all right, enough's enough. And then we saw a little break above and then a sell-off, and we kind of evened out here. And so the interesting thing here is, we saw this massive run up. We saw some consolidation through here, tried to break up above again, and didn't really go very far in the pre-market. And then we saw that sell-off coming in. Now, right before the open, we had kind of a slightly bearish, basically a doji. And it's not exactly what I would want to see, but we already had kind of an upward sentiment. We had that bullish sentiment going from CPI. So when the market opened, I kind of waited for things to flush out a little bit. And you see right here, that doji. So we'll just go ahead and pull this over a little bit. That doji really was indicative of some indecisiveness in the market. And to me, it was kind of, where are we going with this? We were already in a bullish sentiment. You can see right here, we were slightly below the 20. This big black line is a 50. Now, people have asked me quite a few times, like, hey, this doesn't make sense. Everything's going up. The 50 is above the 20. That doesn't make any sense. So this line, this is not the 50 EMA. It's not the 50 SMA. This is a special indicator. It is a zero lag squares moving average. And it gives me a better idea of when the market is moving up and when it's moving down. So when I'm above this, it's a pretty good sign that the momentum is going up. It's not a guarantee, but it's just one factor in making trades. When it's dropped below, has more of a bearish sentiment. So again, you can see right here, just underneath, it didn't really go anywhere, broke above. That didn't necessarily mean it was shooting through the roof, but it's a factor in some of my decisions. So when we entered the market, we ended up with that doji. I knew we were already in a bullish sentiment based on CPI, and my guess was that it was going to continue to go up. The question really was, how far was it going to go up? So right after this doji we see right here, we see a big bullish candle. Well, the second that it crested over this, the top of the wick of this opening kind of doji, I entered a 414 call right there. And quickly, I think I even hit it on the same bar. If it wasn't the same bar, it was the next one. I got my 15% win. And lo and behold, what happened? Right here, you can see this. Let's enter something here. We'll do right here. Look at that. Right there. Look where that stopped. Those bars right here all stopped right along that same line of resistance that we saw in the pre-market. We saw that little gap above. tried to make a run, but it didn't go anywhere. And so that's where we kind of saw everything top out. Now, I was able to take my profits in here because as a scalper, I'm only looking for small wins, small, consistent wins. If this was baseball, I'm looking for base hits over and over and over again, base hits. Home runs are great. They just don't come around very often. Now, today, I wish I would have been a home run hitter, but I'm not, and that's okay. Slow and consistent wins that race. You know, this is the tortoise and the hare. If I'm constantly looking for home runs, I'm going to lose a lot of money. Home runs are great. They're fantastic, just not the way that I trade. That's okay again. So right here, we saw that that kind of shoot up at the market open. I took my win right here, right when it hit that area of resistance again from the pre-market. And then we started to see it come down. Now, here's my indicator with a sell signal. And I love this one because it cracks me up. Nice bearish bar, but if you look at where the bar closed, it was right here, kind of along the lines of a bottom that we had seen in the pre-market. And a nice long wick that, where did it hit? Right off of that 50 squares moving average that I just talked about. Not a place that I'm going to go short when we already have this bullish sentiment anyway. And there's a good chance that when you see something like this, it's going to reject, kind of test that low that we had in the pre-market right here and then shoot back up. But what we saw happen is it didn't. It did reject momentarily, and then it came back down. And it hit this new lower low where it closed out. Now, again, if you look at this, this is above that 50 that I was just talking about. And I don't like to enter into a put option above this line. Again, it's just a factor in my trades. It's not necessarily an end-all be-all. And again, I've always said, when I see this sell signal, I typically don't enter after it because normally I'm a bar too late if I'm entering right here. So the reality is, I should have probably entered here, but again, that doesn't look like a good trade to me. A very weak bullish or bearish bar that stopped at the 20. The wick didn't hit a new low. Nothing about that tells me, hey, enter a put option, right? If anything, I'd look at this and say, it's probably going to try and test this low, which we kind of saw right here, right? But once we saw that continuation, this next bar, so after that sell signal, we had another one. This one right here, boom. Dropped, closed below that 50 squares moving average. To me, that was enough of an indicator. We're at a significantly lower low. We broke past that 50, and for me, that showed kind of that reversal. We almost had like a little double top coming in from the pre-market to the open, and then we saw this sell-off. So I entered here on a 414 put, and ended up, I think I took my profits on the very next bar. If it wasn't in here, I got it in here. Now, this is where I was saying, hey, sometimes I wish I was a home run hitter because I would have loved to stay in that trade and just see how far it would go. But the account that I'm using is a very small account. I'm only trading one contract. Typically, if I was trading multiple contracts, I would probably look to sell off one or more of those contracts for my initial target, let the other ones run with a trailing stop and see what I could get. And so if you look at this, I mean, it would have just continued down and I would have made really good money off of it. So, oh well, not a big deal. So we see it continue to come down, staying below this 50. And we saw this little pullback, little bullish candlestick here. And then we saw it start to come down again. And then right here, boom, at 647, kind of broke below here. Again, very bearish sentiment, and I took that trade. Luckily, I was able to get, again, my 15% down in this area somewhere. Let's see, what time did I get that at? 648. So it literally came in on the next bar. I was able to get that 15% right in there. Didn't really go past that. So very fortunate. I thought we were going to see a much longer run. We didn't. That's okay. I got my 15% and I moved on. Now, what we saw here is we started to see a bottom forming. Look at all these wicks. Came down and it stopped. I mean, where did we end up here? We ended up, oh geez, right there, 411.50-ish, right? Look at all these wicks. 1, 2, 3, 4, 5, 6, 7 wicks in a row, all right here, right about 411, 50-ish, right? So then we see this off of that one rejection right there. That's the first bullish candle. So what am I seeing right here? What I'm seeing is resistance, or support rather, support in the market saying, I don't want to go any lower. And we saw this first bullish candle, and then boom, look at that rejection off of this line of support started to skyrocket. So at 656, I took a 411 call on this trade. And I mean, you can see it just went up. Again, took my 15%. I think I took it somewhere up in this area is where I finally hit that 15% mark. Again, this is where I wish I was a home run hitter. I mean, look how far this went up. Some of these trades that I took today, instead of being a 15% winner, could have been 100, 200% winners instead of the 15. Again, that's all right with me. I'm trading one contract. It's a small account. I'm just proving the fundamentals of using this account to build it up, show people, hey, there's room here, right? So slow and consistent. When you have a bigger account, you can take bigger risks, trade more contracts, trade it differently. Easy to do that. So what we saw it continue to go up. And so I took my profits up in this area, and then look what happened. We finally kind of hit this top here. And again, we started to see a couple of bearish bars. And again, the sell signal that just cracks me up. I'm looking at it going, there is no reason for me to sell right there. Right here on that 50, that's not a good place. Typically that's a good line of support, especially when the bar ends right there. And again, what did we see? Boom, this pullback. So we saw it come back up, didn't hit a new high, came down below that 50, and then we start to see that bearish momentum again. And so right here, this would have actually been a good candlestick to come in on, except it closed right here at that same level. We really saw 1, 2, 3 bars, all bearish, all right in that same area, which happened to be that previous kind of swing low that we just saw. And then the next bar, boom, look at that. Right here at 717, we see this start to go down. And at that point, I broke below this 20, well below the 50, and I see this break, out of this testing. And so I took that 413 put right there at 717, or actually, sorry, I think it took that was a 414 put that I took. I probably should have done it at 413. It's okay. I like to trade in the money. 414, I think I was still at only like $150 to enter that trade. And we see it just poof, come down. Took my 15% here, right? So 15%, 1, 2, 3, 4, 5, 5 trades. Let me see, I got 1 here, 2, 3, 4, 5, right? 5 trades at 15%. So, on the day, I'm already looking at, 75%? So 75% win for the day, and I'm 45 minutes in, not too shabby. Kind of a crazy day with how much movement. And, here we go. We see this sell-off. Now, what we saw here is we started to see some consolidation. And I'm going to walk you through the bad trade that I took, that I lost money on. So we see this consolidation, and if you've listened to any of my previous videos, I love these areas of consolidation, right? We came down. It looked like it was going to try and test this low, two big bearish bars and kind of that rejection. And then you see another bearish bar, but it didn't even close as low as the previous. The wick didn't even get down there, right? And we see this little bullish entry, a couple of bearish bars, 2 more bullish bars, and then look at that. This, to me, was a great opportunity to enter. And I didn't follow my rules. That's the number one key. Follow your rules. I kept saying, I don't like to take calls below this 50. definitely not below the 20. Why would I have taken a call here? I got ahead of myself and I said, look at this area of consolidation. It's going to break out. Well, what happened? I entered right here thinking that this was just going to take off, not really paying attention to my rules. Error number one, right? So if you look at this candlestick, not only did it not meet my rules for where I like to enter, but it closed out really at the top of these wicks. Didn't really go substantially past it. So what happened? I got stopped out right here on this bar. It rejected so hard, so fast that boom, I'm out. But what we saw is a little bit more consolidation through here and then this guy, right? We're already showing that bearish sentiment, consolidated. There was my breakout again. And so at 7:37 or so, where are we at here? Yeah, 7:37, I took a 412 put on this one. I realized that it was right here at that same previous close or previous low, but the wick went down a little bit below it, already in a bearish sentiment. I knew we had all this consolidation, and I took it. You know, to me, again, just like this one, I thought, again, but I wasn't following my rules. This one, nice, strong, bearish candlestick, hit the same low, but I knew I was coming out of a consolidation area where there was going to be a lot of downward pressure. Look at all these bullish wicks, right? We had people buying in here, buying here, buying, all thinking this was going to go up. So what happens when we start dropping down here? These people start getting stopped out. They have to exit their trades. And so what happens is it starts pushing this down, pushes us down until it finally reaches a critical breaking point. And people say, okay, enough. We can't go lower. And that's exactly what happened. So I lost this trade, which is okay. You know, I say it time and time again. You have to be willing to lose in order to win. And so I lost this trade. My own fault. It was a bad trade. I never should have taken that trade. It was against my rules. Nothing about it really made sense. I would give this, I don't know, maybe a 25% chance of going somewhere. It was not a good trade. It happened. Wipe that loss off, you move forward, and now I saw the right trade, came in, I took my profit down in this area somewhere. And at that point, I was actually out for the day. So what we can do is we can kind of walk through these trades and see where would we have entered and what would have happened. And I've already looked at this chart, and I'm going to show you a couple places that I would have entered trades and I would have lost money. So this morning, I was already out by 7:40, Pacific time. I had to take my son to an orthodontist appointment. Wasn't going to trade while I'm on the road or sitting there in the office. But luckily, I was already up significantly. And so right here, we start to see this bottom forming. And we see, this pullback. This would have been a pretty good area for me to buy into, except really there wasn't anything telling me that this was reversing yet. So we see these two bearish candlesticks, pretty good wicks. It looks like there's going to be some upward movement, and there was. But again, nothing, you're not hitting any new highs. We are above that 50, which starts to fall into my range of where I want to be. And then we see it come back down, right? And again, testing this bottom. Is this going to be a level of support that's going to hold or not? We don't know yet. And then it came back up. And where did these bullish candlesticks come? Slightly short of the previous little swing high that we saw there. Again, no reason to get excited there. We're just still kind of in limbo, figuring out where's the market going to go. Came back down, again, tested this bottom right here. But what we saw is these candlesticks started to fall short when they closed of this previous low. Even the wicks significantly shorter. We started to lose power in this area. And then what we had happen here is that we started to see that bullish trend, and boom, right here. We see this candlestick come, and it comes right up to the top, right? And I probably would have entered here, might have waited for this one, right? If you look at this candlestick, it's right there at the top. And I haven't really seen strong confirmation that coming out of this, which was a little bit of chop, you know, I don't know if I would have taken this or not. I probably would have come in here. The problem with coming in here is I'm looking for it to run up, but I also run a pretty strict stop loss. So depending on where I came in at the top of this bar, if I came in here, I was definitely going to make a profit. And you can see it kind of run up. If I came in here, I might have gotten stopped out on this quick pullback. So it just really depends on where my entry is. Again, when you're scalping, and especially on a 1 minute chart, every second makes a big difference. Where you enter makes a big difference. Where you exit makes a big difference. So sometimes it's a matter of a cent. So if I'm looking to come in here at, where it's at 411.20 or so, and I come in at the end of this candlestick when it forms, depending on where I enter on this candlestick, could be the difference of me getting stopped out when it kind of dropped here, or still having a little bit of room to run. So this is why your entry is so important, and it's so important to be quick. And that's where I'm having some of my problems with Webull. Using this account, they're slow to fill orders. So it's very possible that if I came off of this, I might have been getting a fill up in this area around 411.22 instead of down in this area. I mean, look, it opened at 411.05, and I've easily had my orders filled up in this area. So again, I might have got stopped out here. I might not have. It was still a good trade. It's just there was enough volatility. I might have gotten stopped out when it pulled back real quick here. But if I had stayed in, it would have run up. I would have gotten my profit. Even if I got stopped out here, you can see it coming up. We see a couple of bearish candlesticks. That people taking their profits probably off of this bottom. Again, didn't really go anywhere, right? We're not hitting any new lows. You see these these two wicks coming, kind of stopping short of where we were down here. And we just see it continue to climb, right? So climb. We are now in this bullish trend. We're still under the 50. We're above the 20. We're kind of in no man's land here, right? Now, if you're on the riskier side, you could easily start looking for call options, maybe right in this area where this candlestick really closed above everything, maybe on this guy, right? It closed, right there at the top of the wicks. It had a wick that went up. Maybe this is a good entry area. For me, that doesn't match my rules. That's okay. Everybody trades differently. For me, I'm a little bit more risk averse. So here we came up. We started seeing, little pullbacks, higher high, lower low, and look at that. Not really a higher high. We kind of topped out right here. And again, we're still under that 50. So for me, I'm really looking more for a put option than I am for a call option. And so right here, we see this candlestick break below. Came up, came down, tested that high, didn't go anywhere, still below that 50, and then a big, strong, bearish candlestick. I would have taken this trade. Now, I probably would have been a little bit worried when it kind of stalled out in this area, especially as it jumped up above that 50, but it wouldn't have gone far enough that I would have gotten stopped out. And then, as you can see, it dumped here. We took it all the way down. I would have entered right here about 412. I would have taken probably a 413 put on that, because I always like to trade in the money. And it came down. I mean, we hit 410, went down over $1. If I didn't get 15% in there, something's wrong. And but once again, wherever I got that, we've now stayed above that 50. So I'm looking to go long. I'm looking for call options at that point. We kind of see this rebound. I'll be honest, I probably would have entered a trade right here. We saw this come down, saw that bullish candlestick, came down here, tested that bottom, didn't really go anywhere. Now the key here, and this is again where I'm probably looking at the wrong things, and this is how you easily enter into bad trades. This candlestick that came, or the wick that came way down below. Now the bar itself didn't, but that wick came way down. So there were definitely sellers in there when we saw that bullish action push it back up. So that's why I would have looked to enter here, but it probably wouldn't have been a good trade to get into. So here we are. I probably would have taken this trade. I would have got stopped out here, no doubt about it, right? And that's okay. Again, probably a trade I shouldn't have gotten into, and I didn't because this is all speculative at this point. But I'm telling you right now, I probably would have entered that, not paying attention to this. I saw this little pullback, a retest, and when it broke above this area, I probably would have gotten into this trade. Now, in the long run, might have gotten it up in this area, maybe. Probably not, to be honest with you. Um, Almost a guarantee I would have got stopped out with this downward spike here. But you know, this is the risks that you take. You have to be willing to lose a trade in order to win the trades. And so we kind of saw it go up and pull back. We started coming up, and look at this buy signal up here. I probably would not have taken that. Maybe I would have, maybe I wouldn't. I don't really know, to be honest with you. This bar right here kind of stopped out. This one right here, you know what? I'm going to tell you right now, I would have taken this trade. This bar, this candlestick right here, it came up. It was above this previous high right there. The wick was right there at the top, but we were starting to see that bullish sentiment well above this 50 squares moving average. And then this guy, boom, look at that. Jumped above. Everything about it looked bullish. Problem is it didn't go anywhere. So unfortunately, I would have got stopped out on this one, maybe even on this candlestick, but definitely over here. And you just saw it continue to sell off. Now, again, what are we going to look at? Here we are. We've dropped below, but again, we're seeing these bars are just coming into areas of support. They're not really going past. And then look at these, two very weak bearish candlesticks, and then basically a doji, another bearish candlestick that didn't go anywhere. Again, we're really just testing these bottoms. Sell signal here. Some people might have entered it. They might have gotten their money down in this area. Really hard to say, big if. But both of these additional bearish candlesticks, again, I always say I won't take a trade on this one. I'm normally too late if I'm coming in that bar after. Most of the time I'm too late if I come in on this sell signal. And these two candlesticks both kind of came down and stopped out here. Not trades that I personally would have taken, just looking at where they're at. And then we see this, this bullish sentiment here. We start coming down, again, testing these bottoms. Nothing that's telling me, hey, definitely get into this trade until right here. This candlestick right here. We came down, we tested this bottom. So if we look at this, let's take a look. Look at that. There was that bottom. We came down and tested it with this candlestick. We came up, kind of came down again, boom. Tested those bottoms right here. We can see where it closed out. Another bullish pullback, came down, tested, broke below just a little bit, but this candlestick really didn't go significantly past. Not enough that made me say, hey, I definitely want to get in. Came up here, and then boom, this guy broke well below everything else. To me, that was a good sign. I would have entered right here, and we would have seen a win of 15%. Boy, these are those days where I just wish I was going for home runs, because look at where that would have ended up. At 9:52 in the morning, at a 4:11 put, this dropped all the way down, all the way down to, I don't even know, where are we at? We're below 409. Again, this is 100%, maybe even a 150 to 200% winner, right? That's just insane dump. So all the way down here, I would have taken my profits in this area. We saw this pullback, but again, I wouldn't be looking for any puts here because again, I'm following my rules. I'm above the 50, maybe right here, right? It dropped below. I might have taken that trade if I was looking to be a little risky. We're starting to get later into the day at this point, 10:24. right? The markets close at 1 p.m. Pacific. When you're trading same day options, those Greeks start to get you. Those contracts start expiring at the end of the day. Their value continues to go down. So even though you're in the right direction, the value of those contracts can degrade very quickly. And so even though it's going down, the value can degrade. Those Greeks will get you. The degrade is as fast as it's going up. So even here, though, probably would have still gotten a profit. Easily probably gotten my 15%. And then here we go. We see another pullback. We get above. But again, very bearish sentiment. Why would I buy a call right here? There's nothing really that says go long. It's just not. Right? So if anything, I would be looking for a retest of that bottom, which we kind of saw here. Actually hit a lower low. Not a significantly lower low, but it was a lower low. So if I was going to go for anything, I would have been looking to go short right here. Again, I was already out of the market. I don't know if I would have taken it. It closed right here just around the bottom. Still, it started well above the 50. I don't know if I would have taken this one. And then what we see here is that rejection. And a buy signal right here, definitely would not have taken that one. This buy signal came well short. I mean, this could easily be an area of resistance. And if you look at that candlestick, I mean, geez, the wick was right here at the top. Not a good place to come in. Even that next candlestick, that came up short. This guy right here, if I was going to enter into a call, I would have taken that. It broke above. We've started that bullish trend. I mean, look at that. 1, 2, 3, 4, 5, 6, 7. It was the 8th candlestick in a row being bullish, broke above this previous high that we saw in that pullback, and it just rode all the way up. So if I entered at 409.61, I mean, it went all the way up to 411 and change, 411.20. Again, these are those trades that you look back on and you say, man, why didn't I stay in? Hey, we didn't. Not a big deal. Take your small wins. If you're trading multiple contracts, you've got more risk in your budget, go for it. Let your runners run. See what happens. Just put in a trailing stop. Let that trailing stop come up with you. There's going to be times where you hit, grand slams, right? You make a $2 swing on an option. I mean, $2 on a single contract, that's $200. Imagine you've got 10 contracts. Well, that $200 is now $2,000. So there's definitely opportunities. I can't tell you how many thousands of dollars I've probably left on the table by taking the quicker wins. But there's also the money that I've saved by taking those quicker wins because they never really went anywhere. I mean, a lot of these trades that I've just showed you already, I either would have lost on them, which is okay. I still would have come out ahead with the number of wins that I had, or my profit, it didn't really flush out to be much. So they would have come back down had I not taken my wins, and I would have lost. So it's okay. It all comes down to how you trade, what your risk tolerance is, and we just see this continue to go up, right? Another buy signal here that I would not have taken. Again, below that 50, I wouldn't have taken that for myself. I probably would have entered in right here. Now, I would have entered right there. That break above these previous, I mean, look at this. Let's just move this up. Right, there's the top of those wicks, this previous high. And look at that. This one right here, we break above. That's a full bar that broke above the 50. The wicks are above everything. I would have either entered here or entered here. This is a little bit more confirmation, and we just see it run up. Now, again, at this point, we're well past my trading rules. So I wouldn't have been trading past 11. I just don't like it. I don't like what the market does. To me, it's a little bit too unpredictable. Also, trading same-day contracts, very difficult to get the same level of profit out of them because they're coming up on their expiration. Their value is degrading very quickly at that point. So I would have been out well before this. I mean, I was out at 7:40 this morning. So you can see these were some of the trades that I took and some of the trades that I would have taken. And I was able to show you how easy it is to make a bad trade. I just showed you 2 or 3, maybe 4 trades that I probably would have lost if I had stayed in and taken them. Again, you have to pair your losses with your wins. And if you've got a risk to reward ratio that doesn't make sense, you're going to lose money. So this is where risk management comes in. I'm always looking at a greater win percentage than my loss. So if I'm looking at a 1.5 reward to the risk, I'm always going to be ahead, even if I'm only hitting 50%. So let's just do the quick math. If I've got 10 trades, and let's just say my average trade is at $100. Well, 15% of that, I make $15 on that trade. If I lose it, I lose $10 on that trade. So averaging out, I'm getting $5 a trade, right? Out of those 10 trades. So 50 bucks on 10 trades, right? And that's at 50%. I'm nowhere near 50% when I follow my rules. I'm more like 60 to 75%. You're going to have higher losses, higher loss percentage when you're working on these shorter time frames. Like I mentioned in a previous video, that 1 minute time frame is great for picking up on those early moves. You get into a change very quickly. You also have the risk of getting into changes that are not real. They're going to be fake outs. So we saw that in a couple of the trades that I mentioned. It just didn't go anywhere, turned on me, or you get that quick pullback. So it's okay. But that's where risk management comes in, right? Making sure that you have good risk management will keep you ahead in the long run. You win some, you lose some, but as long as your wins are outweighing your losses, you're in good shape. And eventually you start scaling. So today, what would have ended up being, a 75% or 60% win for me today, is definitely going to offset a losing day that I have where I end up losing, 10 or 15% because I stayed in. And that's actually way more than I would have taken because my daily loss target is significantly less than that. So I hope you found this video valuable. I know this is very long-winded, but I hope you got something out of this. Again, I'm not a financial advisor. I'm not a professional trader. This is all for your benefit, just to see what I have done and what I would have done. I'm showing you the good, the bad, and the ugly. Hope you got something out of this, even if it's not what to do, it's what not to do. So stay safe out there, trade safe, make good decisions, always carry a stop loss. If you like this video, please hit that like button, subscribe to my channel. I'd love to collaborate. Again, working from the Bottom Trading Group, great group of people, veterans started and owned, all working together for the betterment of everyone else. No cost associated, no fees. It's all free, just people trying to help each other out. So look for that Discord. Find me on Instagram or on YouTube, TraderJSD. Look forward to hearing from you guys. Hope you have a great week. Continue making those dollars. Today was a printing money opportunity. So look for these again in the future. Have a great one, guys.